Hi, this is the Business Guy. In this video, we're going to be talking about using LLCs to protect real estate from lawsuits. And as a real estate investor, it's essential that you know what to do to minimize your risk and protect your investment and all of your hard work. So that when you buy investment property, what exactly do you do to keep all of your money and efforts from going down the drain in a devastating lawsuit? By setting up a limited liability company, and that is setting up an LLC for each one of your real estate investments. That way each property is separate so that one lawsuit doesn't take all of your properties. So please watch until the end because we're going to talk about three main points. LLC versus insurance, lawsuit protection when someone hurts themselves on the property, and most importantly, the powerful charging order protection that LLCs offer, so that when somebody sues you, you don't lose all of your hard-earned property. I've been in the asset protection business since 1991, and our company started in 1906. We are the largest asset protection firm, and we have attorneys on staff, and we have established literally thousands of LLCs over the years. And by the way, if you are watching this video on YouTube, please click the like button below and enter your comments. And also you can click the subscribe button so that when more videos come out like this, you'll get notified. Now, so what are LLCs and how do they protect you from lawsuits? And why is lawsuit protection so important? According to attorney Jay Menton, the average American experiences 7 lawsuits in his or her lifetime. And that is an average. Business owners, real estate investors is even more. And the bigger you get, the more lawsuits come crashing down on you. And this is especially important to the real estate investor. After all, unlike cash or stocks, you cannot turn on a dime and put them all overseas into an offshore asset protection trust like we've done for so many people. The real estate is sitting right there in plain sight for a judge to tie up in one neat little package and give to your opponent. In fact, I wrote a book in 1994 about limited liability companies, and that's when they were just starting to spread across the country, and most states did not have LLC laws until a favorable IRS ruling came down and gave LLCs flow-through taxation status. That is, by default, the income and depreciation just flows right through the company onto your own tax returns. So there are no extra taxes at the company level. And the taxes and deductions flow right through like light through bulletproof glass. But the bad things, like the lawsuits, the LLC can stop dead in their tracks in most cases. In fact, my team and I have set up literally thousands of LLCs, including all 50 states and internationally. Now, point number one is this. You can't count on insurance. I hear inexperienced real estate investors saying, oh, I don't have to worry about anything. I have insurance. Well, the question is, have you ever tried to file a claim? What is the first thing an insurance company does when you try to file a claim? Not the second, but first. Hey, an insurance company is a business. They are here to make money. So the first thing they do is try to figure out an exception. Liability policies typically have limits, exceptions, and carve-outs so they don't have to pay you. On top of that, what if you have, let's say, $100,000 of insurance, but you get sued for $1 million? Or you have $1 million of insurance and you get sued for $2 million or more. You're dead meat. And you can lose the property, maybe your personal residence, all of your money, and possibly a whole lot more. So have insurance, but don't count on insurance to bail you out of a lawsuit. So how do LLCs protect you? Okay, here's how it works. Picture an LLC we set up for you as a brick wall. And one side of the brick wall is your personal life. On the other side is your professional life, your real estate investments. So let's say somebody slips and falls on your property, like what happened to me. A tenant put up a couch on the second-story window, and somebody climbed up on the couch and tumbled out the window. Fortunately, the injuries were less than they could have been. But if you had the mistake of owning the property in your own name, the lawsuit would not only attach the property, but also attach to you personally. And you could be wiped out with just one mishap. But not you, because you own the property in a limited liability company, an LLC. Each LLC forms its own liability cubbyhole So the lawsuit stops in its tracks inside the LLC and does not jump outside of the LLC to sue your personal assets. By the way, we also place equity stripping mortgages or deeds of trust that we record against the properties, and these are payable to another LLC that we set up for you. Then if needed, we have a third-party lender that buys the liens and places the proceeds into an inaccessible account in an international asset protection trust. Now watch our video on real estate asset protection and offshore trusts for more information. So the bottom line is, when liability happens on the property itself, the LLC protects you from a personal lawsuit. Now, what if somebody sues you? They sue you personally. What if the lawsuit comes from the other side of the brick wall? What if you're driving home from dinner on a Saturday night and rear-ended somebody in their car? You hit a pedestrian, hit a bicycle. In fact, a few months ago, I was on a bicycle and got hit by a car. I broke my neck. I was almost paralyzed. Total freak accident. Had to wear a neck brace for 3 months. This just happened. And things happen. So when you hit that pedestrian on a Saturday night, on your personal time, there are billboards on almost every big city in America with lawyers offering to sue you. It's automatic nowadays. Let's say you have $50,000 of insurance like this lady who hit me when I was on a bicycle, but the medical bills were $185,000, and that was the case. Fortunately, my own insurance covered the difference, and I wasn't paralyzed. So you get sued for way more than your insurance covers, or you're a fraction over the drinking limit and the insurance refuses to kick in. You're getting hit by a sledgehammer by a heartless law firm who just sees you as their next meal. So no matter how high your insurance limits, you can always get sued for more, and it happens every single day. So how does the lawsuit protect you when a lawsuit hits you on the personal side of the brick wall, on the other side? We call that the charging order. LLC statutes have what is called the charging order protection. The theory is that if we all pitched in to build, let's say, a skyscraper, it wouldn't be fair if you were one of the investors and one of the other investors were sued and all of the investors lose the skyscraper. That wouldn't be fair, right? So the LLC laws were drafted to say, let's say you own 20% of that LLC and the LLC owns the skyscraper. The person suing you could attach, let's say, a magnet, so to speak, only to your 20% of the LLC, and that's called a charging order. And whatever the LLC pays you, your opponent would get, in theory. However, they cannot take the property and they cannot take the assets from the LLC. That's how the charging order works. They cannot take away your membership in the LLC, and they are forbidden from jumping in and calling the shots. In other words, they don't have any voting rights. All they could get was whatever management decided to pay out of the LLC. But they cannot force you or anyone else to pay money out of the LLC to them. So the profits can pile up inside of the LLC and your opponent gets nothing. But wait, it gets better. Whoever has the right to receive the income from the LLC has to pay the taxes on that portion of the profits, whether they receive it or not. And that's according to Revenue Ruling 77-137. So your opponent receives no money, but they receive a big old tax bill instead. So that's the beauty of owning your investment property inside of an LLC, because once they get that tax bill, they're going to run right down to the courthouse and take that charging order off, right, in most cases. Now, in most states, you need to have 2 or more LLC members in order to enjoy the charging order protection. Now, this second member might be another company. So there are ways with one person, with more than one company, who can enjoy the same benefits. And in fact, in 3 states, Wyoming, Delaware, and Nevada, a one-person LLC can enjoy charging order protection. Moreover, you can also be the manager of an LLC and control the entire company. and receive as much of the income as the operating agreement allows and have no ownership. So LLCs are very flexible entities and can have tremendous legal protection. Plus, unlike an S corporation, an LLC can have foreign owners. Another benefit is that you can gift a small percentage of the LLC to your heirs, such as your children, keeping under the gift tax level and pass real estate to your children tax-free. This also avoids the property transfer fees that are substantial in many states. So the bottom line for the real estate investor is this. 1, have insurance, but don't count on it to protect you. Number 2, put each property into a separate LLC so that one lawsuit doesn't decimate your entire portfolio. Why? The LLC offers lawsuit protection so that when somebody hurts themselves on your property or you have a rental dispute, you want the lawsuit to stay inside the LLC so they don't come after you personally. And number 3, remember the charging order protection that the LLC offers as a real estate investor. When the lawsuit gun is aimed at you personally, the charging order protection that the LLC offers can help prevent someone from seizing your property and taking it away from you. So I hope you found this information useful. If you want more information or to form an LLC, visit us at companiesinc.com or call us at 1-888-444-4812 or fill out a free consultation form. This is The Business Guy.